Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, April 5th through Friday, April 9th, 2010. Well, folks, this weekend we have some special edition type stuff going on because it was a holiday weekend, and again, we got the jobs number on Friday on at 8:30 a.m. Eastern Time when the market again was closed for the day. So they slipped in that jobs number. I want to discuss that quickly. Then we're going to look at the SPY 10-minute, 60-minute, and even touch base on the daily chart to discuss what this could mean going into next week and where you expect the markets to go. All right, number one. Jobs data was reported on Friday at 8:30 a.m. Eastern Time. Again, the markets were closed on Friday for the Good Friday holiday. The Labor Department reported the U.S. economy created 162,000 jobs in March. This is the biggest increase in non-farm payrolls in over 3 years. Now, it sounds big, but to be honest, it's still not that big. Why? Because you have a lot of census jobs in that. Actually, 48,000 census jobs were in that 162. Those are part-time hiring by the government to take the census. In addition, the estimation was 100,000 were created in March due to jobs that were not created in February due to the snowstorms all over the country and really the horrible, horrible weather that we had in February 2010. So you take out those, you had a small amount of growth for that month. Very, very small. Now, the positive was that you did create, they revised the January and February numbers and actually had an increase on both months in those 2 months overall. So a creation of jobs in January, February, and March, meaning that we've created jobs all this year so far each month. Now, it hasn't been much. In all fairness, it's not much, but overall, the market likes to see it. It sees continual growth now based on the revisions in January, February, and the March number, and that's what it wants to look for going forward. Just a continual increase, getting bigger and bigger each month, ultimately ending in a solid reduction in unemployment in the United States. Now, so that's the overall picture. Now, what did the futures do? The futures here, as I'll tell you, they did initially spike down on that 162,000 initially in the first 5 minutes of that number as people just got the initial number. Why? Because people had been expecting 200 to 300,000 on a bigger census kind of number, bigger census hiring. Now, essentially, what happened was they hired less workers, and once people saw in depth in the numbers, they realized, okay, it was just because of the census, and that's still okay. And the futures responded after selling off of roughly about 4 points initially on Friday morning. The futures rallied back to go up about 4 points. So all in all, the futures closed at 9:15 a.m. Eastern Time, and the futures were up about 4 points on the morning session. So that should carry over into Sunday night. The futures open again 6 o'clock at Sunday night, and we will watch to see where this market goes after a weekend of interpretation on the jobs data going into Monday. Now, positives and negatives on the chart, guys. What you can see recently is we've had these sharp midday sells a lot of in recent days. On Thursday, and again, you're looking at Thursday, April 1st right here, the market's gapped higher beautifully, and it was a beautiful gap up, no doubt about that. What we saw was the market gapping up here above this pivot trend line. Now, again, the level's unbelievably accurate here in the intraday that we can look at, and I'll explain why. This pink trend line I had on my chart for premium members, and if you can scan back right here, you can see the pivot high right here. That's your major resistance level. That's your resistance level going back previously before we hit the 18. If you go back, we were higher on this date over here all the way, and these both, this level and this level, will become very, very important. Notice how this pink line is the pivot low before you went and made the new 52-week high, and this new 52-week high was made on the 25th, which is a week ago from Thursday. So watch that both trend lines come to play on on last Thursday, as you can see. So March 25th right here, you have the low at 117.75, 117.80, and the high at 118.15 or so. If we scan back to current time, folks, look at this. We gap up on Thursday right to this level at 117.75 to 117.80, and then we chug into that double top. That's your shorting opportunity. You could have actually gone long right here and shorted or sold right here and gone short for that nice pullback. You come back into that line, bounce up, then collapse in the afternoon. Now, these collapses have been happening very, very often. You see the volume increase, and it's very rare, especially on a holiday kind of day before the holiday when the markets were closed on Friday, to see the excess volume come in here. But it's all selling volume, which makes you wonder who's selling. Has to be institutional to be creating that type of volume, folks. No doubt about it. But again, luckily enough, the markets were able to be saved again. As the markets fell off a cliff here, came all the way down to the 200 moving average. They rebounded to close sharply up in the last hour of trading. We oftentimes call that the manipulation factor, where you kind of see the markets being saved kind of miraculously, as if a miracle had just happened and they rose from the dead. We've seen it. We've seen it constantly. As you can see on Wednesday, we sold off sharply, one candle up and into the close, and then they gapped the markets up again. So you see that constantly, folks. The market trying to sell off and then rebounding. Now, is that bullish or bearish? Well, right now, until you get the signals for an all-out bullish move, you can't be saying the markets are going to drop really in a hardcore manner. What do I mean by that? Well, you're really looking for 2 consecutive down days. It's called the confirmation indicator in the money stocks. It's not just 2 consecutive down days. There's a little more to it, and our members obviously know what to look for, but I can't really divulge that here in the free video for the weekend. In any case, when we get it, that will signal a good top in the market. You do not have that as of now. Again, I repeat, you do not have it as of now, which means the markets could continue to grind higher or at least sideways. And sideways actually is important here to go over because if you look at the 60-minute chart, folks, here's your 60-minute chart. On the 25th, you made a high pivot at 118.15 on last Thursday. So this is a week ago from Thursday, the last trading day of this last week. And then if you go back a week to the 25th of March, we actually made the same high. So the markets have not exactly been going higher. It's just they've gone sideways. In fact, if you go back even a week further than that to March 17th, now we're talking about 2 to 3 weeks ago, the markets had a high of about 117.50. Well, guess what we closed at on this Friday? So 3 weeks, 2 to 3 weeks later, right here, you actually closed just 30 cents over this level. So interestingly enough, even though the markets have been sliding and making higher highs here, they're not making higher lows. They're making higher lows. They're not making higher highs. And what you actually get here is a triangular pattern. You draw the line straight across here, and then you draw the line underneath, and you get a triangular pattern. The question is which way is it's going to break. What you want to look for here is, see this trend line here? If you connect this low to this low to this low and to this low here, you want to watch for a break of this trend line. That should be an indicator that you could continue to fall, especially if we get the in the money stocks confirmation signal. All right, so just be aware of that, folks. All right, if you break above this 118.15, 118.25 level and close above, we could be in for another little bit of a move up to the upside. Watch the 119.10 level as your next major resistance, and then ultimately 122.50 would be the big level to watch, which happens to coincide with some major daily levels as well. Okay, so that's what you're looking for on this chart going into next week. You really want to watch to see if you get confirmation. Also, keep an eye on those pretty sharp sell-offs that we've been getting. Again, here you can see it right here. Here you can see it again right here. If we go back a little further, you can see it again right here. So we're getting these type of sharp sell-offs, even on the gap down here in sharp sell, but eventually the market seems to rebound. As soon as volume gets light, the market's able to punch back higher, and the same thing has been happening. Again, light volume has been a good portion of the reason why we've seen this market able to float up, as a lot of money can just easily float it up. You basically take the buyers out of the market, and one or two sellers can keep the market floating. And really, that's what the ultimate goal of let's say the government or the PPT plunge protection team would be in that respect. Just keep the market up, let people get more and more confident. The more confident people are, the more they go out and spend. We all know how that works. Okay. So that's what we're seeing here, guys. Just a couple other things I want to go over. Number one, we're debuting a new service. It looks like we did a trial run on Friday. What we did was we're doing live broadcasts now. Live broadcasts in the Research Center. If you become a Research Center subscriber, you get live broadcasts included. Any major news we're going to be sending out an alert. Again, this will be over the next couple of weeks that we're going to try to debut this. A fantastic trial run on Friday. A huge amount of people joining us on that live broadcast. And again, we did play-by-play as the jobs numbers came out. You could see charts, live charts going on. We could watch what the futures do. The chief market strategist, myself included, did analysis of the numbers live as they came out and really gave people an in-depth view about what was going on, what to look forward to, the key levels to watch based on the spiders. So really a live portion, and that's going to be something that we're going to do anytime we have big major news. We're going to do these on market off hours. So let's say 8 o'clock at night Eastern time, China somehow starts to drop, or you see some of these other markets go crazy up or down, or something major happens, a Fed surprise interest rate hike. We can jump in and have a live broadcast and dissect it to our Research Center subscribers. So big things coming. We're also having the text message alerts and email alerts starting to debut. So join us in the Research Center and get involved now as things are going high tech and increasing the services. We continue to try to upgrade those services in the Research Center, give you guys more and more for what you guys want, and continue to help you guys as we grow. We like to give you guys more and more. That's the bottom line. All right, folks, keep an eye on next week. Couple things to go over here. Quickly said, watch next week. Not a lot of economic news, not a lot of earnings news, but next week will be watched because it's going to be coming off this jobs number. Monday's going to be an interesting day. I'll dissect it in the nightly video, obviously, and in the chat room to our premium members. Come join us. We look forward to having you. Take care.